Today is July 31st while we're recording this, 2025. And the year is a little bit more than half over. And I'm doing today the quarterly real estate market review. So since the second quarter is over, we are looking at halftime. And this video is coming out a little bit later than it normally does, only because I've been digging into the data. The data is in some ways really confusing. If you're a current buyer, you know that you've been looking at homes, seeing prices drop. If you're a seller, you've probably lowered your price at some point or started your home sale off lower than you would have expected. And that's how the overall sentiment is in the market, in our local area, as well as nationally. And we're going to dig into the data. This is that I love to just geek out and dig into the numbers video. So if you've been here before, thank you for tuning in again. We're having fun with this in the data because the path is in the math. And if this is your first time joining us, then hopefully this strikes a chord for you and find some interest. We're going to get through this. It's not going to take too long. Please hang tight because there's some interesting twists at the end that I want to share with you that's just going to make you go, that's a head scratcher. I do want to start with a couple of overall ideas, over national statistics. So through our PLACE partnership, Goldman Sachs Investment Bank is one of our business partners there, and we get some great economic data through them. Unfortunately, I'm not allowed to share those slides with you, but I can give you a couple of just thoughts of what I've seen in some of those important statistics. Number one, the foreclosure rate is still really low. In other words, there are fewer homes in foreclosure than there have been in a very long time. So there is no foreclosure crisis coming. I know if you see on, depending certain articles, especially on YouTube, the YouTube prophets, as I call them, doom is coming for the real estate market. Not in the foreclosure world, it's not. The data is not there. And what we also see is that the number of homes for sale is higher nationally speaking. So in other words, there's just more inventory out there. And home sales have dipped as well. Coming back into May, home sales dipped. And so even in June, I haven't seen that data yet, but in June, I heard a different report that home sales were as low as they've been in a long time, nationally speaking, right? But we're really concerned with what's going on in our local New Orleans, Metro, St. Tammany, even Baton Rouge a little bit area. What we're dialing in here in this video is the four main drivers of real estate in Southeast Louisiana. We got Orleans Parish, Jefferson Parish, St. Tammany, and Tangipahoa. And that's what each of these different graphs show you here on the screen as I'm down here in the corner. Orleans Parish is in red, Jefferson is in blue, St. Tammany is orange, and Tangipahoa is green, because we all like to dive into what's my thing, like where does it pertain to me specifically. So now you know your color. You can see any changes in the numbers here in the right sidebar, and then also underneath each of the bar graphs, you can see the percentage changes there. And what we're looking at is year to date. So what we're comparing is 2023 to 2024 to July 31st. So January 1st, 2024 through July 31st, 2024. And then same for this year, 2025. And we're going to move across here, but please do stay tuned to the end because there's just an interesting twist to all this data. So the number of homes for sale in each parish, you can see here at the bottom, they've changed. In Orleans, there's actually fewer homes for sale than last year. Now, last year, between 2024 was up 35% compared to 2023. So it was a huge change. So it's nice to see Orleans kind of get less inventory, but Jefferson, St. Tammany, and have higher amounts of homes for sale by, you can see 8.5% and 19%. Tangipahoa has the same amount of inventory as it did this time last year as well. The number of closed sales, all right, it's mixed. In Orleans, it's up slightly, less than a percentage. In Jefferson, it's down 5.3%, number of homes that have sold year to date compared to last year. In St. Tammany, it's up 7%, and then it's down almost 7% in Tangipahoa compared to last year. So mixed bag of data there, mixed bag. Days on market, right? How long is it taking a home to sell on average? Those days are up 19% in 19.5% in Orleans, unchanged in Jefferson. St. Tammany, it's up 23%. That's the median. You can look at the average actually. It's up across the board. So I like average more than median personally. Orleans, it's 15.7%. It's up 1.8% in Jefferson, up 13% in St. Tammany, and almost 8% in Tangipahoa. In other words, days on market is up. That means it's taking longer to get a home sold. So for now, we're looking at homes for sale is up in 3 of the 4 parishes. Closed sales is down in 2 of the 4 parishes. Days on market is up in all 4 parishes. So what does that tell us thus far? Yeah, it's a mixed bag. Definitely more of a buyer's market, especially depending on where you live. Here's an interesting one. Next one, month supply. How much supply at the current rate of sales, how much supply of homes is there, right? Right here, this is in months, mind you, in months. In Orleans, at 9.7 months of inventory. That's actually down 2%, so that's good. Anytime we can see a decrease in the inventory, that's good. If we see in Jefferson, it's up 13%, so it's 5.1 months of inventory. In St. Tammany, it's up almost 20%. In Tangipahoa, it's up 5%. So more homes for sale, taking longer to sell. There's more supply. And that just law of economics. Increased supply has lower demand. That typically means that prices fall. And we're getting there. So, and then lastly on this statistics is showings per listing. So if you take all the listings out there and we can track through our showing software for the entire metro area. This is not a Keller Williams thing or a Tepper Group thing or even a place thing. This is every realtor for every listing in the entire New Orleans metro area. Showings per listing. All the showings divided by all the listings divided by all the showings. And this is how many showings we get per listing, right? The number of showings per listing is down in 3 of the 4 parishes. The only place where it stayed the same was Orleans. So we have fewer showings in Jefferson, in St. Tammany, and Tangipahoa per listing. Again, so fewer buyers coming through the front door. And I think a lot of sellers have felt this pain in a lot of different ways. More competition, taking longer to sell. So then here's the head scratcher. The sales price is up in all 4 parishes. And these are homes that have sold. And this is the part where the data gets is a bit of a mystery. With all the indicators showing that there's more supply, it's taking longer to sell, and either you have listed your home for sale, if you have, and you know you've had to lower the price over the weeks and months, and then also maybe you listed your home, you got it sold fast, and yet you knew you had to list it below where you wanted it to list for. I mean, these are all realities that our team has experienced, other agents that we converse with and affiliate with in our area, and just the overall sentiment of the market. I mean, nationally speaking, home sales are at a really low rate. 2024 was the fewest amount of home sales in the US since 1995. All right, so what's going on? How are home prices up? I haven't quite been able to figure that out, to be perfectly honest. Inflation is a thing, but with home sales, affordability is still really at an all-time low. With high interest rates, high insurance, high home prices, it's a lot of people are choosing to either continue to live with family or continue to rent. So this is what we're seeing. I double checked that, yeah, these are actually sold prices across the board. Very interesting data. These are averages too. The median is a little higher as well. Here's the extra thing that adds just some more data that points to lower prices. And what I've got here is, yeah, here are the 4 parishes, right? And you can see the dates that we're focusing in on. This is the 2024 version. I'm going to scroll down here. So we're looking at these last 2 columns here, expired and off market. So expired simply means that they had a marketing agreement and they didn't sell the home, the marketing agreement expired. Maybe these homes relisted with another agent or the same agent. Maybe they sold, maybe they didn't. But these are homes that didn't sell in the first period of time. Off market means they pulled it off for some type of reason. They changed their mind, whatever it is. They didn't have to relocate out of state after all, whatever the situation is. Looking at the total number for last year, 3,269 off market properties plus 9. So you're at 3,278. So let's just call it 3,250. Right, we're just going to round to the nearest whole number. 3,250 year to date. This is this year, right? You can see here I'm marking in red, same time frame, same parishes. This year it's 3,659 plus 608. So you're at 4,200 compared to 3,250. That's basically like a 1,000 unit difference. What that's saying is there's 1,000 more homes this year in 2025 that came off the market that did not sell. And so what I'm seeing with all that's a mind-blowing statistic. This is all 4 parishes again. That's a lot. So what it's saying is, since we know that home prices are up, and yet there's more month supply, there's basically more homes for sale, days on market is higher, fewer buyers per listing, especially if you have more homes for sale, you have to stretch those out, those same pool of buyers basically, and yet prices are up. So what that's telling us is that from where I'm sitting, buyers are willing to pay a good price for the right home. Buyers can afford to be picky. They don't have to see every home. They can sit on the sidelines and wait because they're probably comfortable where they're at, either because their rent is below what they'd be paying for a house note, or they have a house note already that's in the 3% range or something along those lines. So that's the summary of the market. There's no clear-cut definition as to why home prices are up, because everything else is pointing that they should be coming down. Yet, as I said in the beginning, the path is in the math. So if you have any questions, you want us to dig deeper on things, by all means, please reach out to me, to David, to Brandon, to Nikki, to Jane. We're happy to help. And I guess just one more thing before we sign off. It's easy to cherry pick data and say, well, that one statistic says that my home price needs to be higher, or I should be able to sell in 30 days. That's not necessarily the case. We have to take the data as a whole, and that as the whole tells the story. And the overall message of the data is that it's taking longer to sell a home and that there's more competition as a seller. And for you as a buyer, you have the opportunity to really kind of cherry pick your home, keeping in mind though that the right home, when it's priced right, does sell fast, as well as it can go for a price that maybe more than you're expecting. So you might have to compete over that one home that's really special, and there's 10 others like not so special ones out there that are just going to sit. So just keep that in mind. As we say on the buying side, marry the home, love the home that you're going to buy, date the rate. Rates are going to come down. It's going to happen, if not this year, sometime in 2026, because there'll be a new Fed chair. So you can always refinance. That's that. Thank you for tuning in. We appreciate it. Share the video as you like. Let us know if you have any questions, because your particular home has its own particular value given the neighborhood, the location, amenities, things like that. And we're happy to drill down and share that information with you. Thank you so much again. Have a great day. Bye-bye.